You can absolutely pull six figures in 0% APR credit cards in the next 30 days, and the banks will mail you thank you notes with bonus points on top. Sounds wild, sounds like a late-night infomercial. I get it. But this is how scrappy micro businesses across the United States are funding product launches, flying to trade shows, and stacking inventory while their competition is still waiting on a bank to return their call. This is credit card stacking, and if you run a small business in 2026, you need to know how it works before your next big idea dies in a spreadsheet. Most people get this whole thing twisted. They grew up hearing that debt is bad and credit cards are the devil. Your uncle probably told you that at Thanksgiving while he paid cash for a used Camry. That advice is broke. In America, credit is a tool. A hammer can build a house or smash your thumb. The hammer is not the problem, your hand is. So let us talk about how to swing this thing without losing a finger. Here are 9 things that most people get dead wrong about 0% APR credit card stacking for business funding and travel hacking. First, people think their business starts at 0, so they have to wait to build business credit. Nope. In the United States, your personal credit is the launchpad. When your LLC is brand new, the bank is not underwriting your LLC. They are underwriting you. If your personal FICO is 740 and clean, you can walk into 50K to 150K in approvals in one afternoon. If your score is 620, you will get laughed out of the browser tab. So before you even think about stacking, you need to get your personal house in order. Pay down personal balances to under 10%. Kill late payments. Get added as an authorized user on an old card with perfect history. Your business does not have a credit history yet, so you are the credit history. Own that. Second, people apply one card at a time, like they are ordering at a deli. That is how you kill your score for no reason. Banks report your applications to the credit bureaus. If you spread 6 applications over 6 months, that is 6 separate hits. Your score drops each time, and each new bank sees the last bank's inquiry and gets nervous. Stackers do it different. You apply for 4 to 8 cards in one day. The bureaus usually bundle those hard pulls into 1 or 2 if they are in the same week, and definitely if they are in the same day. You take one small hit and walk away with a whole deck of cards. This is called app-o-rama in the points community. It is not illegal. It is not shady. It is just efficient. Banks expect pros to do this. Third, people chase the biggest credit limit and ignore the promo length. That is ego talking. For a micro business, cash flow is the oxygen. I will take 5 cards at 8K each with 18 months of 0% over 1 card at 50K with 9 months any day of the week. Why? Because if you are buying inventory for Q4, you need to sell through Q4 and Q1 before you pay. If your promo ends in January and your customers pay you in February, you are stuck. Always ask how long is the 0% period and what is the balance transfer fee after. Time beats size when you are bootstrapping. Fourth, they get sloppy and swipe a business card at Target for diapers. Do not do that. The fastest way to blow up your bookkeeping and get on the IRS radar is to mix funds. The whole point of business credit is to separate your business and personal life. Get a system. 1 card is only for Facebook and Google ads. 1 card is only for inventory from Alibaba or Fair. 1 card is only for travel to trade shows. When tax time comes, you hand your CPA clean statements and you sleep fine. Also, the banks give better protections and point categories on business spend. Use the tool how it was built. Fifth, they think points are a toy for travel bloggers. Listen, if you are stacking cards, you are already playing the points game whether you know it or not. A chasing business preferred is 100,000 points after you spend 8K in 3 months. That is $1,000 in cash, or $1,250 in travel, or potentially $2,000 if you transfer to Hyatt or United at the right time. You just funded your business at 0%, and the bank paid for your flight to that conference in Austin. That is not a hack. That is literally the offer on the page. Americans love a coupon, and this is the biggest coupon in the country. Do not leave it in the drawer. Sixth, they have no plan for when the music stops. 0% is a promo. It ends. On day 366 or day 456 or day 636, that rate jumps to the go-to rate, and the go-to rate in 2026 is ugly. We are talking 20 to 29%. If you still have 40K on the card, when that happens, the interest will eat your profits in 1 quarter. This is where businesses die. So you need an exit plan on day 1. Set a reminder in your phone for 60 days before each promo expires. Plan A is pay it off with business revenue. Plan B is roll it to a new 0% card with a balance transfer. Plan C is replace it with a low-interest term loan or a line of credit from a credit union. If you do not have a plan, you do not have a strategy. You have a wish. Seventh, they think they have to lie on the application to get approved. You do not, and you should not. Banks ask for annual business revenue and years in business. If you started this month, put 0 years and put your projected revenue. You are allowed to project. If you have a purchase order for $60K and you plan to do $200K this year, put $200K. Be aggressive, but be real. You are the CEO. You set the forecast. Fraud is making up a business. Forecasting is not fraud. Also list your household income where it asks for total income. If your spouse makes $90K and you make $30K, the bank wants to know the full $120K is there to back the card. Read the question, answer it, do not get cute. Eighth, they close cards after the promo ends because they are mad about the annual fee. That is how you nuke your credit age. Part of your score is average age of accounts. If you open 8 cards and close 8 cards in 2 years, your credit file looks like a toddler. Keep the no annual fee cards open forever. Put a recurring charge like your QuickBooks subscription on each one and set auto pay. For the cards with fees, call and ask for a retention offer or downgrade to a no-fee version. Keep the history. Your future self will thank you when you go for $250K in funding next year. Ninth, they think this is only for product businesses. Wrong. Service businesses crush with this. You are a photographer. You stack $40K at 0% and use it to buy cameras, lenses, and book flights to destination weddings. You are a marketing agency. You stack $60K and use it to float ad spend for clients who pay net $30. You make 10 to 20% on the float and the bank charges you 0. You are a content creator. You stack cards and use the points to fly to VidCon and the percent to buy gear. If you have cash flow and a plan, this works. If you do not have cash flow, this will bury you. Know which one you are. Let me give you a picture so it sticks. Credit card stacking is like getting a free pass to Costco on Black Friday. Everything in the store is 0% for the next 15 months. You can load up on inventory gear and plane tickets and walk out without paying interest at the door. But Costco is still Costco. In 15 months, the cashier shows up at your house with a bill. If you flip that inventory and turn $50K into $150K, you pay the bill and laugh. If you loaded the cart with stuff you did not need and never sold it, you are stuck with a mountain of debt at 25%. The store did not scam you. You scammed yourself. Here is my personal stake in this. I have watched too many good people with good ideas get stuck because they thought their only options were a bank loan or a rich uncle. My friend tried to open a boutique gym. The bank wanted 2 years of tax returns she did not have. She gave up. 6 months later, her competitor opened down the street and used $80K in 0% cards to buy equipment and prepay 6 months of rent. He had time to build membership, and now he owns the block. Same city, same dream. Different tools? I would rather see you be the second person. So what is the actual stack in 2026? It changes every month, but here's the backbone that works for most micro businesses. Start with Chase Inc. Business Unlimited and Inc. Business Cash. No annual fee, 12 to 18 months, 0% and solid limits. Grab Amex Blue Business Plus or Blue Business Cash. Amex is generous if your credit is strong, and they often give 12 to 15 months 0. Add U.S. Bank Business Platinum. That one is boring, but it sometimes runs 18 to 21 months 0, which is gold. Then layer Citi Double Cash Business, if you can get it, and Bank of America Business Advantage. If you are doing heavy ad spend, look at the Amex Business Gold for points, even if the APR is not 0, because the points can outweigh the interest if you pay it fast. That is 6 to 7 cards. If you average 12K each, you are at 72K to 84K. If you are stronger, you can push 150K to 250K. All at 0%, all with points on top. Now the travel hacking piece. Every dollar you have to spend anyway should run through a card with a bonus. Buying 10K of inventory. Do it on a card that needs 6K spend for 90K points. Booking a hotel for a market. Use the card that gives 5X on travel. Flying to see a supplier. Transfer Chase points to United or Hyatt and cut your cost by 40%. You are going to spend the money. you might as well get the free flight. That is how you go to the trade show and write the whole trip off and still pay zero interest on the spend. That is the game. But let us talk about the risks, because I am not your cheerleader. I am your coach. If you miss a payment, the 0% can vanish and the penalty rate kicks in. That is 29.99% overnight. If you use more than 30% of any one card, your score can drop 40 points in a month. If you apply for too many cards at banks that are sensitive, like US Bank, you can get denied for everything. If you carry balances past the promo, you will feel pain. So this is not free money. This is a cheap loan that you have to respect. You have to be the kind of person who sets calendar alerts and checks statements. If you are not that person, do not play. So here is your homework. Today, pull your credit from Experian or Credit Karma. If you are under 700, fix that first. Pay down balances. Wait 30 days. Tomorrow, list your business expenses for the next 6 months. Be real. If you need 40K to launch, write that down. Then match cards to the spend. Need 6K in 3 months for a bonus? Put inventory on that card. Need 18 months to float a lease? Put that on the US Bank card. Then set up a tracker. Use a spreadsheet or Monarch or Notion. Every card gets a column. Limit, promo, end date, payment, due date, auto pay, status. You check it every Friday. No excuses. This is how micro businesses are built in America right now. Not with pitch decks and venture capital, with points and promos and discipline. The banks built the system. You can complain about it or you can use it. One more thing, do not go tell the bank you are doing credit card stacking. They do not care what you call it. To them, you're a customer opening accounts and spending money. Keep it professional. Pay on time. Do not bust out. If you do this right, they will raise your limits over time and send you pre-approvals for 50K lines. That is when you know you won. So I will leave you with this. I'll leave you with this. If I dropped 100K of 0% capital in your lap for the next 15 months and said you cannot spend it on anything personal, only on your business, would you take it and build? Or would you walk away? Because the risk of having to pay it back is too real. Your move.